Hey everyone, we're going to check out the chart for Opendoor technology, but first I want to look at the news and I want to show you some data I found and some charts that I looked at how Opendoor could possibly go much higher once the economy gets better. But first, let's take a look at the news. All right, first things first, Opendoor soars 9.6 amid renewed rate cut hopes. So now they're saying maybe there will be a rate cut in December. They're going back and forth, flip-flopping back and forth, rate cut, no rate cut. Now, rate cut? I don't know. But let's just analyze the current information that I just received here. So now it says the followed dovish comments from Federal Reserve Bank of New York President and CEO John Williams earlier this week, saying that he believes monetary policy would be modestly restrictive amid weak labor market data. It then says Williams' remarks sparked hope despite Federal Reserve Chairman Jerome Powell announcing earlier this year that a rate cut in December was not guaranteed. So Williams is pretty much saying maybe there will be a rate cut in December. And remember, that's what Opendoor needs. We need rate cuts after rate cut after rate cut to get back on top again. The real estate market is a sector highly sensitive to interest rate movements. If there's a rate cut, Opendoor goes up. If there's no rate cut, Opendoor may go down or may just sit there. Any rate cut, increase, or cut could impact financing costs and thus affect home affordability. The more rate cuts we get, the cheaper it will be to finance houses. And I will show you real quickly the negative news about Opendoor, but real quick because we want to focus on the positive of Opendoor. The most popular narrative for Opendoor is that it's 136% overvalued. When you calculate that, it shows that Opendoor should be at $2.86 instead of $6.75. And the reason why is because there's a sharp disconnect between consensus valuation and the market price is rooted in bold assumptions about future revenue growth, margins, and ability to scale a disruptive but volatile business model. So pretty much Opendoor price where it's at currently is based on future revenue growth, margins, and the ability to disrupt how the housing market works. So that's how we get the $6.75. But if you believe the revenue growth, the margins, and Opendoor would not be able to change how the housing market works, that's how they get the $2.86. It just depends on what side you're on for Opendoor. Do you believe or you don't believe? If you believe, $6.75 is about accurate. If you don't believe Opendoor can do what they set out to do and you don't believe in the CEO, then $2.86. So it depends where you fall at in that situation. But I will say this, as far as the stock market, when you buy into a stock, buy into a company, you always have to buy based on what you believe in. Investors and institutions buy a stock based on what they believe will happen in the company in the future, not what's going on right now. So a good time to buy into a company before it has huge revenues, great earnings, and becomes very popular, because you want to get in before everybody else gets in. Remember that. So it depends. If you believe in Opendoor, you pretty much want to invest early. If you don't believe in Opendoor, you're going to wait and see what happens later on. But you're probably going to be late when it comes to investing in Opendoor. You're going to get the high price of Opendoor, not the low price where everybody bought in because they believed. Now here's some data about Opendoor I was looking at. The revenue for Opendoor in 2021 into 2025. 2021, they were at $8 billion. 2022, 15.6. 2023, 6.9. So that's a big change from 15.6 to 6.9. 2024, 5.2. 2025, 3.6. So we have a big change between 2022 and 2023, a big change. And from 2023, it pretty much just slowly declined. And as you can see, 2021 revenue growth, 211%. 94, and then 2023 to 2025 and didn't look good. Homes bought 36,000 in 2021, 2025 only 6,000. The housing market industry-wide slowdown forced Opendoor, Zillow, Rocket, Redfin to shutter their own capital-intensive iBuying platform in 2022. That's how Opendoor became the top iBuyer in the U.S., but its core market is still shrinking at the moment. And once again, if you believe in Opendoor and the CEO, this is the time where you want to buy, a point where they're trying to regain their status. And if they do regain their status, they'll be number one because Zillow, Rocket, and Redfin pretty much closed the door on that. So Opendoor will be number one if everything goes as planned. Now, after looking at this, 2021 to 2025, I did more research. I'm going to show you what I saw. All right, real quickly, here's the max for Opendoor. This goes all the way back to 2020, right? Max, 5 year, 1 year, all the way down to the 1 day. So the max, they were at $10.93. Came all the way up to the $30 area, $31.58. No, $34.59. And then it came down, started in 2021, came back up at the end of 2021. And after that, that was it. It just went straight down from there and just consolidated and kept on going down because the housing market was in big trouble. And now we have this little area right here because we're trying to come back, and we're labeled as a recovery stock right here. So in 5 years, Opendoor is down negative 69%, 1 year 196%. So we're definitely looking better now. Year to date, 324%. 6 month, 892%. And then 1 month, that's when we start to get the decline. But we're up so much, so it's normal. Now this is it right here. If you're still here, this is the meat of where I wanted to get to. Everything I said is leading up to what I'm about to tell you right now. Why did Opendoor do so well in 2020? And how do we get back to that status where we were in 2020? Because that's what we're trying to do. We're trying to go back to 2020. Not technically, but as far as our business growth. So why did Opendoor do so well in 2020? Opendoor performed well in 2020 primarily due to a housing boom. And that's where we're looking at now. We're trying to get to a housing boom in 2026 sometime, or 2027. Hopefully 2026, but if 2027, that's okay too. A lot of these recovery stocks, sometimes you gotta have patience, right? So Opendoor is doing well because the housing market was booming, characterized by consistently rising prices and lower interest rates, which perfectly suited its home flipping business model. So what are the key factors that made Opendoor what it was back then? Strong housing market. That's where we're trying to get to. A strong housing market sometime in 2026 or 2027, no later than 2028. But hopefully 2026, that's what they've been saying recently. Mid 2026 is when the housing market should start coming back together again. So a strong housing market with high demand and rapidly appreciating home prices. Opendoor's business model, which involves buying homes with cash, performing minor renovations, and quickly reselling them for a profit. That's what they do. Opendoor thrived in this environment because the rising market prices mitigated their risk of losses. Low interest rate. Here we go again. The Federal Reserve cut interest rates, which led to record low mortgage rates. Same thing that we're trying to experience now. This made homes more affordable for buyers, increasing overall market activity and demand for housing, which in turn helped Opendoor move its inventory quickly with a profit. So here's the blueprint from 2020 that we need to emulate in 2026. This is what I made a video about a while back. Opendoor make things quick and convenient at a cost, but if you're trying to get this house sold or you're trying to buy a house quick and you want it convenient, Opendoor is for you. Opendoor's model of offering a quick, all cash and predictable selling process was a significant value proposition for sellers looking to avoid the traditional stresses of marketing and open houses. Opendoor is right there for you for quick and convenient selling or buying. So 2020 was a perfect year for Opendoor. Now 2026 needs to be a perfect year for Opendoor also if we want Opendoor to be a successful recovery stock. So as far as Opendoor stock, we are on a weekly chart and we're consolidating pretty much the 860 and the 595 area. That's where we have been consolidating for multiple weeks now. And after hours, we're at $6.73. We're down only a little, 0.30%. And we've come a long way, 54 cents to $10.87. And we're trading in the higher portion of the pump from 54 cents. We're way up here consolidating. We're not down here, and we're definitely not down here. This is where you don't want to be at right here, consolidating down between $1.69 and $3.97. If things goes bad, we want to consolidate between $3.97 and $5.95. But we don't want to go down $3.97. That's pretty low. A lot of people are going to be at big losses if we go down $3.97. So $5.95 to $8.60 is the ideal area of consolidation. Where I would like to trade at next would be somewhere between $7.50 and $8.60. If we can trade in that area, then it means we are definitely progressing. We do have higher lows on the weekly because November 7th low was right around 523, and now our low for last week was at 614, and right now where we at $6.72. So we are having higher lows. To me, the most important thing when you're talking about long-term investing, not day trading, but long-term investing, you want to hold for multiple years. The most important thing is going to be the weekly chart and the monthly chart, right? All we want to see is progress. This was nice on the monthly chart, 2020. And then as you can see, there was a big red candle showing a downtrend on the monthly. back up again, back down, because the housing market pretty much crashed right here in 2022. And here's the monthly chart for Opendoor. If you want to look at far ahead, 3 months green, 2 months red, and we're still in a decent spot, right? Because we came from here all the way up here, and we're trading right here, so it's still not bad. And it shows it on a weekly as well. Daily chart, a little bit different, because this is where you see the day traders come in. They want to day trade the stock. A lot of shorts shorten the stock, so you're gonna have a lot of fluctuations, up, down, roller coaster rides, right? Down here, up, down again. So what happens next? Can we go up? Hope so. The RSI looks decent for a nice buy the dip. So hopefully this continue on the RSI. And I'll reiterate this: main resistance we need to break to have a nice uptrend is going to be $8.60. The support $5.95. But for resistance for Monday that we need to look at, we need to break that $7.09. The support for Monday is going to be $6.42. That's going to be the initial support. Sometimes when you have an initial support, it means it may sell down to that support area and then it'll bounce back up. So the candle's right here, right? It could come down here and then bounce back up right above that 642. If it does do that, probably what will happen right around here to 627. It may come down to 627 and bounce up. Then we can gradually start to go back up again. Thanks for watching, and don't forget to like, comment, and if you haven't subscribed yet, please do so, especially if you are following Opendoor technology. Take care.